That said, let's talk about stocks that are doing well. Anupam Rasayan, that one has reported a solid set of numbers. The margins have expanded by around 500 basis points. To understand what's the way ahead, we're joined by Mr. Vishal Thakkar, the Deputy CFO at the company. Hi, Mr. Thakkar. Good morning and good to see you. What's the way ahead? What kind of revenue growth do you end this year with? And margins, what should the broadband be?
Yeah, so Nigel, thank you for taking us on your channel. Yes, the recovery has been good. We have been able to see a good growth, and we expect that the Q4 the growth will continue, largely on account of pharma, polymer, and agrochem coming back. So we see a good growth in Q4 as well. Margins, yes, this quarter has been significantly higher. I would continue to guide anything in the 26 to 28% band on an average is where I would try and guide it, because there were a couple of products which were high margin products which has a higher balance in this quarter. But on an annual basis, you will see numbers to be more the range of 26 to 28%.
Okay, 26 to 28% in terms of margins. You're saying the revenue growth is also expected to sustain in Q4. I want to know for the full year FY25, I think, 9-month period when I'm looking at the revenues, they're seeing a decline of 13%. So by the end of FY25, what is the number that we should watch out for in terms of revenue growth combining the whole year?
If you look at the whole year, probably we'll be in the flattish side, because the Q4 will give you a good numbers, but my H1 was a little weaker compared to the H2. So I would try and say it will be around about a flattish on a console basis.
Okay, flattish growth. So maybe 1% or so is something that we could see. And agrochemical, you did say it's seeing signs of recovery. Could you tell us overall, is this continuing in Q4 as well, the recovery? Is it persisting? And what are the volumes here? Anything you could indicate on that front?
So if you see the price wise, it has been a flattish because the input costs have been pretty much stable. So the volume, the uptake that you see in the revenue is largely on the base of volume, and we expect it to increase the growth to increase in Q4 and continue that momentum in FY26 as well. So all in all, I think agrochem is expected to deliver a good recovery to my mind.
Okay, good recovery that you're seeing in agrochem. You're sticking to your margin guidance of 26 to 28% for FY25. FY26, what are you expecting there? Recovery from, if you're seeing a recovery coming in agrochemicals, pharma, polymers continues to do well. What are we expecting in terms of growth in FY26 from the company?
So FY26, if you see our commentary that we have given in the past as well, we expect that FY26 should be a good growth year. We would expect anything about 30-35% plus growth that we should see, which historically also, if you see in past, barring a couple of years, we have been able to deliver that kind of a growth. So we expect that to be there and margin to be stable. I would not want to guide a higher margin as of now, but yeah, it will be in the stable range.
Yeah, being conservative is not such a bad thing. As you're saying, we should stick to that band of around 26 to around 28%. Now, this is the third quarter. And don't give out your working capital cycle, but I recall that it had got elevated in the first half of the year and you were guiding that it comes down. So is that on track by the end of this year? Where do you see the working capital cycle stabilize at, and what is the ultimate target?
So see, I think as we have been historically also guiding, the ultimate is what we have said, around about 180-200 days eventually. But this quarter, this year, we would be more on the flattish side or improvement of it. And I would not want to give a specific guidance for this year or next year. I would wait for the balance sheet numbers to come out when I would guide that. But yeah, we would be watching that number very closely, and we would expect it to be more stabilized over the medium term.
Right. And Mr. Thakkar, your order book surely is at around that 9,000 crore where we are seeing. Could you just talk to us about execution timelines for these orders? And also, you're seeing an increase in those letter of intents coming in, but conversion to the revenue seems to be a bit slower. So could you indicate that as well?
I'll take 30 seconds more for this answer, because I need to give a background to that. Typically, when you sign an LOI, it takes you around about 18 to 24 months, plus or minus 6 months, to really convert it into commercialization. And then it takes you another couple of years, 2 to 3 years, to really get to the ramp up of the full volume. So what numbers that you see is are the full volume numbers, right? And so that's the backdrop that we should be seeing it. And if you look at whatever we had signed in 2022, we have commercialized it and they are ramping up. So today we would have commercialized around about 3,100 crores worth of LOIs and contracts that we would have commercialized. Yes, also we have signed one LOI and one contract recently, which we have announced yesterday, If you look at those two are expected to be commercialized starting CY25. So practically FY26 is when you will see those numbers as well. And we expect that significant number of other LOIs which we have signed in 2023 and 2024 are also expected to be commercialized in 2026. And probably a quarter or two and a year or two, and you will see the full wrap up of that as well. And so, to me, the numbers look in track. Maybe a couple of quarters plus or minus can be there, but overall it looks on track.
Okay, Mr. Thakkar, thank you so much for joining in with us, giving us an understanding in terms of the outlook of the company in FY25, Q4, as well as FY26. It's a pleasure having you on the show. Bye.